Welcome to Future Focus, a financial strategies podcast where we make the complex simple. My name is Troy Branch, and I'm excited to be joined here today by he's gonna laugh and he's gonna say no, but a legend, a legend in the industry, a legend, frankly, at the company that I work for, Ameritas. Excited to have Keith Gillies with us. Keith, how you doing?
I'm doing great, Troy. It's great to be here, and thank you for saying all of that. And you starting off with with misleading people about me being a legend.
No, well, we're going to have a fun time because we've done a couple of Future Focus episodes focused on business owners, but I like to think this one is going to be more of application. Like we're going to talk about sort of application of some of those common business owner problems, and we'll get into that in just a little bit. Everything we talk about today, much like every episode of Future Focus, it's not intended to be sort of financial advice. It is intended to be educational, and that's what we go for here on Future Focus. We want to help make those complex ideas simple. In this case, sort of the common problems of business owners that keep them up at night, that are pain points that Keith that Keith works with quite a bit. So before I dive in and ask you what those common problems are, tell us, just give us a quick sketch of Keith Gillies.
Okay, I'll try to do that as quickly as possible. But I went to school, I studied political science at University of New Orleans. I wanted to be a lawyer for the State Department.
Good man.
And neither one of those things worked out for me for a myriad of reasons, but my life has turned out pretty well. So I did get a political science degree. I went on to earn an MBA from the Freeman School at Tulane University. My MBA is in finance. I use that a lot to help business owners and talking with their CFOs and so on. And I'm a certified financial planner. I've always considered myself a planner. And we go in today and help business owners with comprehensive planning. That's to help them with their business planning and then integrate that with their personal wealth planning. So my focus lately has been on business owners. When I say lately, the past few years, as I've gotten older, running my own business, turning over, creating a succession plan for myself with my second generation, my son. And I know that today, particularly privately owned businesses are the backbone of our country. And I'm worried about these businesses not surviving into the second generation. And so we talk a lot about that. How do we get this business to the second generation? And so that's been my focus, and I said the last few years, is working with business owners.
So you're working with business owners. You're helping them plan sort of holistically, 360 degrees. Use all the buzzwords out there. So you're sitting across the table from a business owner. What are you hearing back from them when they say, Keith, these are the things that I worry about?
Yeah, it is pretty common. The themes are common, and again, it's what they're worried about, not what I'm worried about. It's what they want to do, not what I want to do. Mm-hmm. I run my own business and I have my own objectives. But one thing that comes up always is taxes. Mm-hmm. Hey, how do I mitigate the taxes in my business? What about succession planning, which we've already talked about? And then we'll ask, do you have a natural successor? Is there a child or a nephew or a niece or someone in the business? Do you have key people who can come in and take over the business? So those are things that come up a lot for us. And then, trying to help them understand the balance of their business and personal lives. These people have worked hard their whole lives to build these businesses. We want to talk to them or hear from them. How do they want to balance that part of their lives now as they maybe start to step away a little bit from that business and get more time freedom? So we're looking at that. And then what do they want for their legacy? What do they want to see happen to their business in the long term? So it comes back to we're discovering from them all of these things that they want to do. They tell us where they're hurting, and then we build a plan. We call it an architectural rendering of what this will look like in the future for them. That's built around what they're looking to do.
Okay. So are you okay with diving into each one of those sort of individually?
Sure. Yeah.
All right. So taxes and planning. Now you've kind of mentioned that, and taxes are a given, right? Like I haven't met a business owner that's like, hey, taxes.
Yeah, I can't wait. I can't wait to pay that bill.
Yeah, so when it's presented to you that taxes are a thing, are my pain point, what's your response?
Okay, so first of all, we have to find out how they're taxed because that's very important. And we'll ask them, how's your company taxed? Well, I'm an LLC. And we know that that can mean anything. Mm-hmm. So then we have to drill down a little bit and, okay, tell me what kind of tax return do you file for your business? Do you file an 1120S? And I'm trying not to
hold on a second. Yeah, there we go. So inside baseball, Keith was like, what's the jar for? So I had to explain the jargon jar to him. And my explanation was, hey, when we start saying code sections and acronyms.
I did it. I admit it.
All right. So
we need to find out how they're taxed.
Okay.
They're going to be taxed as a corporation, as an S corporation, maybe as a partnership. They could be just regular sole proprietorships. We need to find all of that out so that we can then ascertain what is the best way to structure that business if any changes need to be made to help them minimize those taxes. Mm-hmm. And there's lots of ways to do that.
So hey, taxes are a problem. Let's figure out what we can do.
We got to figure out why first.
Okay, figure out the why.
Yeah, why are you paying so much in taxes? Why do you think you're paying so much in taxes? And you can talk to one person, they think one number is a lot of taxes, mm-hmm. and you talk to another person and no, that's not a lot of taxes. So, the taxes are in the eye of the beholder in this particular case.
Okay.
And then we have to talk about all the different kinds of taxes because it's not just income tax that a business owner is faced with.
Okay.
Like Social Security taxes, Medicare taxes that are all built in, and are they? Do they have employees? And those employees, I caught myself. Do they have employees? And if they have employees, well, then they're matching those payroll taxes for those employees, right. Social Security and Medicare. We want to find all of that out, and that's all part of the discovery. And then we can say, okay, here are some things when we come back, when we start, here are some ideas to mitigate that.
Right. So you're still like it's not about like there isn't there isn't a magic.
There's no magic bullet. There's no magic formula. If somebody tells you that, they're telling you a story.
It's dig in, find out the why.
Find out the why. Everybody's situation is going to be a little different.
Right.
And the way they look at things will be a little different. Now if we just start rattling off ideas about, well, you could do this, you could do this, you could do this, it might not mean that their eyes are going to glaze over, that right. Business owner's eyes. So we want to collect the data, go back, put it together in a form that our hopefully future clients can understand. It's up to us to make them understand that, to help them understand that. And then we can show them these ideas and do what we call what ifs, right? Mm-hmm. What if I did this? Well, then that's what happens. And we have software that helps us do that. We can do it right in front of the client. If you do this, boom, here's what happens. And you can see it flow out right. immediately.
We talked a little bit about succession and a little bit about legacy, but are you employing that throughout all of the sort of pain points that they've identified? Like, for instance, succession, we sometimes call it business continuation, but
correct. Yeah.
Yeah. So
succession and legacy are two different things.
Okay.
So
explain that.
In my opinion, they're two different things. So the first thing is, do we have a succession plan? Who is going to take over this business? And then we break that down into, you got to have a succession plan. Otherwise, what happens to your business? What happens to all your employees? We got to have a bad day plan. We've talked about that before.
Yeah.
And what is a bad day plan? Well, do you have a plan if you have a really bad day until we can get to the point where we can do this other plan and make it more organized for you, Mr. and Mrs. Business Owner? So we want to do that. We need to find out again, is there a natural successor? If not, who in the business can take over? Is there a harvesting event when you're going to sell your business? Mm-hmm. And today there's a lot of private equity that are buying up closely held businesses, privately owned businesses. So we want to talk to them about that. Legacy, in my opinion, is, what am I going to leave out into my community? What am I going to leave for my family? And I think that's legacy planning. That's really important.
So succession and legacy, along the same lines, but you're thinking about what the business does after at some point you're no longer there.
Every one of us is going to leave this earth.
Mm-hmm.
Okay. Now we can have a plan or not. If we don't have a plan, we do have a plan. It's just given to us by the state or by, it could be anything, but we got to have a formalized plan. So let's make sure we get that done. And then you tell us when you want that executed, if it's a good day plan.
Mm-hmm.
So that's sometime in the future. I plan on selling. Well, let me give you an example from me personally. My son, Blake, is in our business. He's been with me a long, long time. He is my natural successor. We started 2 years ago where he took over running operations for us. And every year he gets more and more to do.
Mm-hmm.
Well, that frees me up to do other things like planning. And that's a formal plan that we have to ultimately get him to take over the business. And he will buy me out of the business. When we get to that point, we want to know, in my case, I have a son in the business. Well, I have 4 other children who are not going to be owners of that business.
Mm.
How do we treat them? What do we do for those other 4 children? And some people say, well, I'm just going to leave it. I'll leave it to my 5 kids. You got 4 kids who aren't working in the business, right?
Right.
You got one who's doing everything in the business, and he or she's 20%. To me, I don't think that's fair.
Mm-hmm.
But I think what's fair is to have a buyout with my son as a second-gen successor, and then he shares in 20% of that wealth, just like my other 4 children.
Right. Well,
after my wife gets done with it.
After your wife, yeah.
Yes.
There we go. We did an episode, and I can't remember what episode it is. We've done enough that I can't keep them straight now. But we did an episode where because what you just described is real life estate equalization.
It is.
I mean,
yes.
it's real life estate equalization, and we did an episode of the top 5 reasons.
Is that jargon?
Well,
no, not really. Okay,
I mean,
we're good.
If it is, I probably have one in there already.
Okay.
I have to remember. Estate equalization probably is. Well, okay, you know what? I'll just keep me honest. Keep me honest. All right. But yeah, but you just described kind of what we talked about in theory from, like, we had some experience, but this is your business. That's real world.
It is. It's real world, and it's also important. And I preach this to my clients and particularly business owner clients: is when we're done with this, with your plan that you designed, not my plan, it's not your kid's plan, it's your plan. Then we're going to go explain it to your family, so that everybody knows what's going on with your business and ultimately what's going to happen with that wealth.
Right.
We think that's very, very important. And the big issue, I probably don't have to say this. You know what the big issue that business owners have is losing control. They don't want to give up the control of that business.
Shocker, right?
It's a shocker. I'm struggling with some of that myself.
Okay, so another problem that they have, and I don't know if you mentioned this, but I thought about it because another episode we've done is what we call executive compensation. And if people will remember that episode, we talked about recruit, retain, and reward. Do you have an employee that you need to recruit, a employee that you need to retain, or one that you reward? And oftentimes, that's your succession plan, whether you know it or not.
Well, here's the other thing with that. That is often your next competitor. If you have a lot of my business owner clients, they worked for other firms and they didn't have a retention program to recruit, reward, and retain their key employees. Mm-hmm. So I can do that too. If I'm doing all this work and selling all of this business or whatever it is we're doing, and you are making all the money, well, I'll go start my own.
Right.
Now my chief competitor is my former executive or my former employee. We want to prevent that from happening with business owners by asking them about their retention program and what are they doing to reward their employees. And if they're not going to be owners, give them a pot at the end of the rainbow. Say, if you stay with me 10 years, you get this, whether I sell it to my son or not. We did something in our organization. As you know, we have some restrictions on who can own and do things in an organization like ours. So we created a shadow stock plan for our employees. Mm-hmm. where we created 1,000 units that equates to 10%.
I'll just go ahead and throw that in. That's phantom stock. That's
I didn't say phantom stock.
Well, I know, but I know what it is, and people are going to go. So I'll just go ahead and throw that one in there for you.
We created a phantom stock plan. If we sell any pieces of the business, whatever that employee's ownership is, and whatever their percent of that percent is, they get a check when we do that.
Right. Yeah. And so for people, business owners that may be watching, phantom stock is kind of just like it sounds. It's technically non-qualified deferred compensation, and I know I've put one in there for that acronym, so I'm not doing it. Okay, I do it again.
Yeah, me too.
So it's a form of non-qualified deferred comp where you give where you give sort of phantom equity in the company, and it allows that key employee to feel ownership, to feel ownership, but not actually have ownership.
Right. That's correct. Yeah. And we're not going to get into all the other ways to maintain control and because that's beyond this. That's something that would come out in one of the what ifs.
Right.
It's like, okay, let me explain to you, if you want to do these things, here's a way to do it. I'm not going to go into that because I'm running out of jargon. Marbles or whatever these are.
So yeah. So and again, it's a good time to reiterate. We're not sort of recommending phantom stock or non-qualified deferred comp, because simply, as Keith has said several times, it just depends and everything's different. So these are specific recommendations. We just want to keep it educational and sort of spark the mind for the business owner out there viewing right now.
And let me touch upon that, because I think what you just said is important. There is no, we said it earlier, there's no magic bullet for a business owner to solve all of these things. And I tell people, hey, listen, I'm not a hammer, so you're not a nail. And every solution is not the same. We custom build every solution for every business owner based upon what they need and what their situation is. And every situation is a little different.
Absolutely. Okay, so we talked about control earlier, and this is the one that at least I feel like is one of the hardest things to get across. How do you get the business owner to sort of balance the business is the thing, right? Like we know oftentimes the business is the largest asset in someone's overall portfolio plan, whatever it may be. How do you get them to separate, or at least try to separate from that business?
Well, that's going to be their biggest asset. Almost always their largest asset inside of their estate is the value of their business as a running, going concern.
Mm-hmm. Now,
with that said, I also tell our clients, I can't make you more money than you can make yourself by investing in your business. But we do need to take a waterfall. We need to take some of that income out of your business and at least start to create other pots of money for you that are not directly tied to that business, so that you can then use that in the future for whatever you want. And it could just be, I'm doing all of that. I'm never going to stop working. I have a succession plan. My son's going to take over. My daughter's going to take over. Or my key exec's going to take over. And all of that money I'm going to leave to my grandkids. We don't care. But we want to start taking some of that waterfall and setting it aside somewhere. And then we're trying to leverage what we're doing with that, with tax planning and some other things that we would do with those assets,
right,
with that money.
And what's the response? Like, what's the reception typically?
Well, they understand it. They already know that, man, everything's tied up in here. But we have to show them how to do it, how you can do it that makes them comfortable in doing it. And, maybe it's just a percentage or two of the value of the business every year. We can figure that out. And again, I don't want to get down into the weeds with this, Troy, but there are ways to figure that out and to illustrate it. But they already know. They know that I've got a lot tied up in the business. Now, some people are wealthy beyond their business, right? And just for whatever reason. But, we see a lot of assets tied up in real estate, into equipment, into trucks, and whatever else
Right.
that they need to operate their businesses.
But getting them to, like, we talk about it on in advanced planning. We talk about helping the business owner see the value of living independent of their business.
That's what we call it, financial independence.
Yeah.
We want to get you to financial independence. And if the business value is your financial independence, we better sure have a successor. We better have a bad day plan.
You better have retention. You better
you better have all of it. If that's what you want, that's okay. We can put a value on that, but we better have an airtight plan at that point.
Right. Okay, so one final question before we get wrapped up. If you had one or two things to, and you can speak directly to hopefully the business owners that are viewing this episode. If you had one or two things that you would say, hey, these are the steps that you can take today to start down to address some of these pain points, what would you say?
Well, let's start off by saying, do I have a successor? Is there someone is there someone to step in if I have a really bad day? That's number one. Number two would be if I have that successor, what are the arrangements for that person to actually take over the running of the business for me? You need to ask yourselves those questions before you go anyplace else. If that's not in place, what does it mean? What does it matter? I'm not helping them take care of their families. I'm not helping you, the business owner out there, take care of their families and their loved ones and their employees, which I think is very important too. People have helped you build that business all those years. We need to make sure they're taken care of too.
All right. Well, thank you so much.
You bet.
See, that wasn't so bad, was it?
No, it wasn't. We didn't put too many in there.
No, exactly. So, first of all, I want to thank everyone for your time and attention. Thank you for tuning in to Future Focus, a financial strategies podcast. I want to ask you our similar call to action. You can hit like, make sure you subscribe. That way you'll be notified when a new episode comes out. I would also say you can put questions in the comments below. We're really looking for listener questions because we want to have a listeners questions episode every 5 episodes. So so at episode 15, 20, 25, and hopefully then the numbers get higher, we still have listener episode questions every sort of 5th episode. So keep get those questions out. I want to thank everyone for your time and attention. My name is Troy Branch. Everybody have a great day, and we'll see you soon on Future Focus.